Joining us live now is Renisha Chainani. She's commodity analyst, capital markets at Edelweiss Financial Services, and Vijay Bambani is author and CEO at bsplindia.com. We're just starting with you. What's your sense coming in for crude now? Because there's a huge run-up, but the markets, of course, are looking at the Jackson Hole meeting. That's something all the asset clusters are watching out for. What's your sense coming in for the energy sector?
Manisha, my guess is, like you rightly mentioned, of course, the first trigger would be the Jackson Hole meet. If there's quantitative easing or even concrete assurances of a quantitative easing in the near to medium term future, I think prices might just run up a little bit. But my guess is the impact of the QE will be far more muted than QE1 or even QE2 because people know debasement of currency will temporarily spike up hard assets. As far as levels are concerned, on the MCX, after the Jackson Hole trigger, crude will basically have to trade above the 400 levels, 5,400 levels. So unless 5,400 is taken out with high volumes, expanding open interest, which tells me that the bulls are basically enhancing their exposure on the upside, I think a sustainable rally might just be elusive in the absolute near term. Of course, over the medium to long term, there are various triggers in the geopolitical situation like the Israel-Iran standoff. You have the hurricane season. You also have any kind of positive economic triggers coming in from Europe or USA, which could drive prices higher. You also have the impeding winter season, which is cyclically a bullish time for crude prices. So the absolute near term, watch out for 5,400. Only above that, I think momentum traders need to go long.
Sure. Renisha, what's your sense coming in for the crude oil prices and the natural gas as strategy for today?
Yes, Manisha, even I think that 5,400 is a major resistance level for crude oil at MCX. Below that, my view would be to sell crude oil on around 53.40 levels with the stop loss of 53.75 and target of 52.90 on the downside. The reasons are like we have seen energy prices coming down and there is weak sentiment because the hurricane Isaac has eased a little bit and it has changed its direction and it has made the landfall, but oil refineries are not affected much. So this is the one reason which is negative for the prices. The second reason is prices are also getting downward pressure due to API inventories that was released yesterday, and it showed that there was 5.5 million barrels of increase in the inventory, and this suggests that today that DOE inventory would be released. It could unexpectedly shoot up. So today being an inventory day, prices are likely to come down and get some pressure on the higher side.
Renisha, also what's
talking about natural gas, my view is talking about natural gas, my view is bearish in that also, because technically natural gas has broken the important support of $2.7 at NYMEX, which was a neckline support of the head and shoulder pattern it had formed, and at downside I expect 2.4, 2.3 dollar levels. So at MCX the downside supports would be around 140 and 138. So for intraday traders, I would recommend to sell natural gas September contract around 148 levels with the stop loss of 150 and target of 145 for intraday.
Renisha, what's also your sense coming in for the precious metal prices, especially silver, because that really seems to be outperforming gold right now?
Yes, silver, my view is bullish because there are positive news coming in the silver market. One is that the ECB President Draghi, which has suggested that he would not be present in the Jackson Hole meeting where all central banks are going to meet. So in his absence, it is speculated that he is preparing for his another ECB meeting on 6th September, and where he would announce some quantitative easing measures. Also, there are speculations of quantitative easing coming in from Federal Reserve. So this two, ECB and Fed coming up with some QE, and these speculations in the market, prices are going to get some support. And after the last week's run-up, there is some consolidation and profit taking we have seen in 2-3 days, and this is healthy for the bullish markets. So once prices trade above 57,800, I think it could go up to 58,200 on intraday basis, and stop loss should be kept at 57,550.
All right. Another space that has seen a continuous decline for last couple of sessions at least has been the base metal prices. Vijay, what's your sense coming in for this sector?
Here again, Manisha, people would basically be waiting for the Jackson Hole meet, and in the interim, one is seeing counter-specific activity. It was nickel a couple of days ago. Now, what is appearing slightly optimistic is lead. But since you have a major news trigger which could impact prices around the corner, I would take the cautious way out and limit my exposure to the mini series. I would buy the August mini series at 108.75. That's a marginal decline from where it's currently trading at. I would hold these longs with a tight stop loss at 108.25 and expect to book profits at about 109.5. The other one which is showing signs of some faint promise is aluminium. I would again restrict myself to the mini lots here. I would buy the August mini futures at 104, hold them with a stop loss at 103.5, and I would be happy to book profits at 104.75.
Renisha, what's your sense coming in for copper today? Because that has seen a continuous decline, down nearly 1% right now.
From the base metals, copper is trading range bound from 410 levels to 430 from last few sessions. So I would not touch copper for intraday. I think nickel is performing better than copper, and nickel is getting support again and again at the prices like 870, 880 on the lower side, and the upward resistance is 920 to 950. So prices have rebounded from that level last week, and I think this upward movement would continue. So I would recommend to buy nickel around 906 with the stop loss of 896 and 920 as the targets for intraday, and for positional basis 950 would be the next resistance level to watch for.